What's going on, guys? Welcome back to another video. So I'm about to break down this trade here that we took here on July 4th that made us a little over $1,500. As you can see here, this is the before picture when we enter the trade. Obviously this was the after when price hit our take profit. Did take an initial sell position before this earlier, which was a $500 loss, but on this trade idea we did make a little over $1,500, which put us up about $1,000 on the overall day. In this video I'm gonna create a full top-down analysis going from the higher time frames to the lower time frames, showing you guys how I create a daily bias, as well as giving you guys my exact execution and risk management plan, so you guys not only learn from this video and how I break down this trade, but I also give you a full-on trade plan on how I trade, so hopefully you guys can see similar results. And if you guys want this entire trade journal as well as the ability to trade live with me every single morning, all you have to do is click the first in the description and join Spark. First thing that you want to pay attention to as a new or developing trader is time, right? What specific time are you going to trade, right? Obviously we're looking at the Nasdaq, and the Nasdaq and S&P and Dow Jones, like the indexes, are predominantly traded during the New York session. So obviously I'm trading these markets between 9:30 to 12 p.m. every single morning. And when it comes to creating a top-down analysis, I know a lot of people can try to, overcomplicate it and, try to add a whole bunch of jargon that just isn't necessary. It's actually a lot easier than you think, and I'm about to break it down pretty simply. It's basically just marking out areas of liquidity as well as marking out areas of higher time frame support and resistance, and then utilizing those areas of support, resistance, and liquidity pools to create context clues for where you anticipate price to go next, either higher or lower. If that sounded confusing, don't worry, because I'm about to break it down to you very, very simply. So first thing, areas of liquidity as well as higher time frame support and resistance level. So when it comes to liquidity pools on a day-by-day basis, you always want to mark out previous daily highs and lows. So we can see here we have these previous day highs above us, as well as below us we have these previous day lows. Most of the time, I probably say 80 to 90% of the time, price tends to come back into either the previous day high or the previous day low. So whenever you're creating an idea for where price could go into when it comes to liquidity, it's very important to mark out these specific levels. And after marking out these previous day highs and lows, you're basically just creating an idea for what you could anticipate to happen next. So we can see here that the market opened up right here at around 6 p.m. And since the market opened up, it didn't really make an emphasis to go up into the previous day high. Instead, it actually immediately opened up and immediately started going lower. This gives me the idea that price failed to take out these previous day highs. So if we know that price has failed to take out these previous day highs, most likely price may come down into and target these previous day lows. So now that I have an idea for where I anticipate the marketplace to go, basically makes my trade a lot easier. I know that price is not going to take out these previous day highs because right when it opened up, it could have easily went up there, but it didn't. Instead, it saw a full-on reversal to go lower. So coming into a market, I'm not looking for buy positions. Instead, I'm looking for sell positions to go lower. Meaning that if the market were to open up and go higher, I would not chase those higher prices, because my higher time frame emphasis or my higher time frame bias is overwhelmingly lower prices. So a lot of you guys are put in this position to where you don't know if the higher time frame is going to go higher or lower. And when you start trading, you see the market open up and go higher and you would chase it. And after you chase it, it would immediately reverse on you. This could be avoided if you simply understand the higher time frame narrative. If I know price is going to go lower down into these previous day lows, momentum or push to the upside, I'm not looking to chase that. Instead, I'm seeing that as an opportunity to manipulate traders. And after manipulating those traders, I can then frame a short to go lower. And this is basically how I trade 90% of the time. I need a higher time frame idea for whether price is going to go higher or lower, and then I wait for that manipulation to go against what price is currently doing, so I can get the best entry into the direction that I want price to go down into. So that's really going to be about it. So we took note of the previous day high and the previous day low. Now we're going to go down to the 1 hour time frame to get additional information. 1 hour time frame here, we can take note of a couple more things. So we can obviously see here that we do have bearish order block, which is this last up close candle, and this is in the form of a drop base drop. See, we had this initial drop to the downside. Price created this last up close candle before we see a continuation lower. So obviously this would be marked as a potential area of resistance that if maybe price comes back up into, price can be met with that resistance to continue going lower. Obviously below us, we can take note of this area of liquidity, which is referred to as the London session lows. So obviously the London session is between around 2 to 6 p.m. EST. Obviously this 6 a.m. candle establishes this low. So obviously this is that London session low. We're starting to piece the puzzle a little bit more. So we're within this 1 hour bearish order block. Right? We have this area of liquidity below us, which is this London session low, these previous day lows, as an area of liquidity. And emphasis is seeing how are we going to react within this bearish order block. Now what we do here is we create what we call an if then scenario. So if we can see price come back within this bearish order block level and it find resistance within this level to see a break lower, then obviously we can frame a short setup reaching back below these lower prices. But if the opposite happens, let's say price opens up and it breaks above this order block, and then we see a retest and price finds support here, then we could maybe shift our idea to maybe higher prices. Even though my overall emphasis is lower prices, we have to understand the marketplace is constantly evolving and constantly changing. And this is why it's important to have an if-then scenario. If this happens, then I'm going to do that, because you don't want to be in a position to where you're marrying a specific bias, right? A lot of traders, they may be looking for shorts on a day, and that day could be overwhelmingly bullish, and they're trying to short the market here, short the market here, short the market here, and they end up blowing their accounts because they're marrying a specific bias. It's important to have multiple options on the table just in case if one doesn't pan out. But on the 1 hour time frames, that's pretty much about it. We do have a fair value gap up here, which I will take note of. So if price were to break above this order block and retest it, maybe we could find support to come into that fair value gap. But since we are within this bearish order block, I don't really think price is going to get all the way back up there. I'm going to go down to a 30 minutes time frame to see if I can get additional information. 30 minutes time frame here, we get a little bit more information. So obviously we had that 1 hour order block, and now we also have this 30-minute order block as well. So we went from the 4 hours to the 1 hour to now the 30 minutes. What can happen is price could potentially break above this 1 hour order block and find resistance within that 30-minute order block to go lower. This is the exact same setup, right? Drop, base, drop. Drop, base, drop, right? The exact same order block setup. It could come within this 1 hour order block, find support to push lower, or it could come within this 30-minute order block to find resistance to go lower. See, it's very important to mark out multiple different zones within the markets because it could refer to either one, as well as we do have that fair value gap up there. So it could either come within this 1 hour, 30-minute, or this 1 hour fair value gap. 3 zones within this specific level that price could obviously find resistance in. Basically that's daily bias, right? We're marking out our areas of liquidity, marking out our areas of support and resistance, and we're creating an idea for where price can go next. We've already seen that price has been in an overall downtrend. We already know that price tends to come back down into previous daily highs and lows, which we can see it failed to take out the previous day high. So most likely it's going to take out this previous day low. Now that we have an idea that prices in a downtrend is going to continue going lower, we're basically just waiting for that manipulation for price to open up, come back within these resistance levels, either this first one, the second one, or this third one, to obviously find a break or structure away from it to then reach back below lower prices. Keeping things pretty simple. Right? It's not about predicting the markets. It's simply about creating an idea for what you anticipate to happen. Then you wait for price to come to you. And then as it comes to you, you then strike. I'm going to go down to the 15 minutes time frame because 9:30 is just about to open up. 15 minutes time frame here, 9:30 is just about to open up. What I want to see here is I want to see price open up, come back within these specific levels, and I want to see a breaker structure away from it. Let's see how this pans out. 9:30 opens up. We see price give this initial spike to the downside. And then we see this reaction higher, which is consolidating here back within that 1 hour order block. We can see right here, we get that breaker structure, right? This is what we call a change in state of delivery. So we can obviously take note of that 1 hour order block right there, right? Which we talked about in orange. And we can see here that price created that manipulation higher. When price created this manipulation higher, it took out this area of liquidity. It took out these original highs, right? So this is obviously a level of resistance, as well as we have areas of liquidity within it. So this is what we call an inducement setup, as well as this is what we call a change in state of delivery. I'm about to break these down pretty easy. So an inducement is pretty simple. So we have an area of resistance, and within that area of resistance, we have a liquidity pool. So once price comes back within this level, it not only taps into this area of resistance, but it also takes out these levels of liquidity. So this is what we call an inducement, right? And usually when price creates an inducement, it creates a strong volatile move in the opposing direction, because it not only taps into that area of resistance, which is already an influx of liquidity within that specific level, but it also takes out original highs, where most likely traders put their stop losses back above this high point. So it ends up taking out two areas of liquidity, creating a strong move. So that's the inducement. It is the change in state of delivery. So we have a bearish order block right here as an area of resistance. Price comes back within this level, and then we see a strong break away from it, creating another bearish order block. So this last up close candle right here now creates a bearish order block. This last up close candle right there from that drop base drop. And then as price came back within that level, we can see a strong displacement in the opposing direction, closing back below this last up close candle, right? It has to close back below this last up close candle. So we can see a strong bearish engulfing candlestick closing back below that last up close candle, creating a new order block right here. So this is a new order block. This was a higher time frame order block right there. We saw that rally up into that level, change in state of delivery by this bearish engulfing candlestick, closing below the opening price of this lower time frame last up close candle. So this is now that change in state of delivery from a higher time frame order block down to a lower time frame order block. This was the exact trade idea that I took. Entry within 34.25, my stop loss back above this high point. And the reason why I had my stop loss back above this high point is because this is the order block high. So obviously this was that manipulation higher, right? We can see here that price created this manipulation to the upside, back up into that resistance level. And once we get this bearish engulfing candlestick closing back below the opening price, right, of this last up close candle, this is a bearish order block. So I can put my stop loss back above this last up close candle high because I know that this is a bearish order block. Break that down very simply. So we have a area of resistance right here. Price comes back within that area of resistance like so. Once we get a break of structure away from that, this gives me the confirmation that price has found resistance within this specific level. So I can trust my stop loss back of this high point because once we tapped into that resistance and left from it, price should not come back up there. So just like in this example, price came up within that 1 hour order block. Then we see a strong push away from it. Price should not come back above this high because we already tagged this area of resistance and ran away from it, meaning that it has no reason to come back up there. Short within that order block level, stop loss back with this high, and I was reaching back below this London session low. Offered me more than a 4.5R, which we can see price eventually comes back into me. You can see here, this is where the market closed. So I ended up taking profits right there for about 30 points. And July 4th was obviously a bank holiday. So obviously the market did close a little bit early, but if it wasn't a bank holiday, obviously this would have been a great setup, reaching down below either maybe these 930 lows, which we have these 930 lows right here, or maybe down here into these London session lows. But this is where I ended up taking a trade off for about 30 points, 25 micro contracts on the NASDAQ, which made me a little over $1,500. I mentioned I did take an early sell right here, which I was able to quickly take off. I took a re-entry right there, reaching back below these lower prices. This video, I broke down my entire strategy from the higher time frames all the way down to the lower time frames, and I've given you guys a full-on trading plan, right? Exactly when I trade, 9:30 to 12 a.m. EST, how I created daily bias from the 4 hour, 1 hour, 30 minutes, 15 minutes as my lower time frame executions, how I trade on the 15 minutes time frame. I wait for price to come into that higher time frame level, see that 15-minute break, and then from that 15-minute break, I utilize a 15-minute bearish order block as my overall entry, reaching back below lower prices. And throughout the entire year of 2025, I am live trading with my team. So if you want to trade live with me every single day and catch setups like this every single day with me and my training team, as well as access to 100+ hours worth of additional lessons, one-on-one help, coaching to help you make your first $10,000 or even your first payout, then obviously you guys can click the first description and join the Spark Trading Mentorship. Hope you guys got a lot of value from this video. Make sure you guys click that like button, subscribe if you're new to my channel, and comment what you guys want to see next. I'm your mentor, Arkhamtrades. Be safe.